Still on NTV Weekend Edition. Now, tomorrow the government will sign what is called the final investment decision. In this discussion, you will hear me use the abbreviation that is FID, where Uganda, Tanzania and the two oil farms ahead of plans to build the oil pipeline from Hoima to Tanga in Tanzania. The Government of Uganda, acting through the national oil company, UNOC, together with the French oil major Total E&P and the China National Offshore Oil Corporation, will commit to move ahead with investment in the infrastructure for crude oil production. Now, to give us a background and also some analysis on what this means for us as a country, we have DENIS KAKEMBO, a lawyer who has studied the oil industry extensively. Welcome to Talk of the Nation tonight.
Thanks, Sandra. It's a pleasure to be here once again.
Well, we know that the signing of the FID was initially supposed to happen on the 22nd of March, but after the death of the former president of Tanzania, it was pushed ahead. But it is happening tomorrow, and there is a Ugandan out there that is hearing the FID for the very first time. What does it mean to Uganda and East Africa in general?
Okay, thank you. It's been a long time coming to get to a point where we are. From about 2014, everyone has been expecting the magical final investment decision or project launch. And we are at a point where finally it's taking off. It's taken quite a bit of time for this to happen, but as I will explain later, it's not surprising that it's taken this much long time to take off. Now, final investment decision or project launch is a commitment, an irreversible commitment that is given by the oil companies, that is being CNOOC, the China National Offshore Company, Total, and the Government of Uganda acting through the Uganda National Company to move ahead with investing in the necessary infrastructure for crude oil production. So from the time after tomorrow, when the project is launched or FID is announced, whatever nomenclature of the word they might use, you should expect that there's going to be a bevy or flurry of activities in terms of awarding contracts and people spotting business opportunities. So from tomorrow up to the next 6 months, you would expect it's a period where a lot of contracts are going to be given. It's a period where people are going to start jostling for the real opportunities that the oil and gas infrastructure development can offer.
Okay, now we are aware that Uganda, Tanzania, Total and CNOOC are the major players in the FID. Yes. But what are some of the major roles? What are their major roles in this project? Okay.
Now, first and foremost, the oil was discovered in Uganda.
Yes.
And a crude oil discovery in itself, while significant, oil remains valueless unless if it comes out of the ground. Now, Tanzania ordinarily shouldn't have been part of what we are saying today. But the reason why Tanzania is also a key player is because Uganda is building a pipeline through the territory of Tanzania. Now, a pipeline is a key option, because without the pipeline, you don't have an evacuation route for you to be able to sell the crude oil. It's one of the options you have at bay.
Was it the best option?
Initially, if you recall, when we made a discovery, Uganda's president was keen to have in place a refinery. In fact, at some point in time, he was categorical that no oil would leave Uganda. Now, there was a bit of a disagreement between the government and the oil companies regarding whether indeed only a refinery is what was needed. So subsequently, a compromise was reached whereby it was agreed that you would have a pipeline and refinery. And the reason why that was the case, domestic demand would only consume about 50 to 60,000 barrels of crude oil per day. But at maximum production, we will be producing about 230,000 barrels of crude oil per day, meaning there will be an excess of 170,000 barrels, which cannot be consumed locally. So it can only make sense if that oil is exported. And that's why we have a dual approach of building a crude oil pipeline, and possibly at some point in time, the refinery might take off.
Now, if you recall, we do remember there were some tax disputes that led to the holding of the project.
Yes.
Do you think Uganda was right to put it on a hold, and have these been resolved?
Yes, I actually remember we had a talk of the nation show at that time when the relationships between government and Total and Talo Oil dramatically failed because of the disputes over tax. And our prediction, or what we urged both players, was to come back and sit on the negotiation table and objectively evaluate the issues at hand. Now, one of the issues which the oil companies raised was that the reason Talo Oil was moving out of this transaction, or out of Uganda's oil, was because they did not have money to spend into future projects. In fact, initially, Talo Oil had not intended to move out of Uganda. They had intended to reduce significantly their stake. And they were concerned that asking for tax, when the major aim of diluting stake was to raise financing to invest in the future projects, was not very well intended. So initially, Talo Oil was meant to pay about, I think, $167 million in that aborted transaction. But when they pulled out later, after going back on the table, I think government has collected less than $20 million in terms of taxes. I think government had to give in to this concession. It really makes a lot of sense, because if the transaction involving Talo Oil had not closed, certainly Uganda's oil and gas industry would not have moved forward. But there were also other issues relating to how Total and CNOOC would treat their acquisition costs after they had bought off Talo Oil. All those agreements were ironed out, and at this point in time, that's why we are moving towards project launch. And I think it's been a valuable lesson for government stakeholders. Negotiations of such a scale are complex, and it's not surprising that it's really delayed. But fortunately, it's taken off, and I know lots of valuable lessons have been picked, and I would expect that if Uganda is ever to go into such major projects, the negotiations will be a little bit more seamless, because now government officials are aware of the need to balance national interests, but also commercial interests of the oil companies.
Well, after the signing of the FID, we know that it's going to lead to the flow of about $10 billion US. And just to be curious, which country is likely to get the lion's share? And what are some of the key sectors that are going to benefit the most?
Okay. Of course, Uganda being the country that has a resource, it's a country which should get the lion's share of production, especially with oil and gas production. In terms of the oil that is going to be sold, Uganda is going to sell majority oil. And some projections which we did some time back, I think Uganda should get over 70% of the total wealth that the oil and gas sector is going to generate. That is in terms of direct revenues to the government. Of course, Tanzania also stands to benefit in the sense that the pipeline is going to go through Tanzania. And when the pipeline goes through Tanzania, Tanzania is going to levy some fees for the pipeline going through Tanzania. But more to that, it may not even be a direct fiscal receipt, but the pipeline is opening up northern Tanzania. Wherever the pipeline is going to pass, infrastructure is going to come up, which would mean that Uganda has been heavily reliant on Mombasa as a port. But now Tanga is also going to be opened up because you're going to have roads which are going to be set up. Yes. And so Tanzania in the longer run could benefit, because when you go and use their port, there are fees which you're going to pay. So they may not get as much money as Uganda is really getting, but from a strategic point of view, they benefit. Tanzania benefits a lot, but then also Uganda benefits a lot, because I remember in 2007, when there was the post-election violence in Kenya, commerce almost came to a standstill, because Uganda was majorly dependent on Mombasa as a means of port. But now when you have Tanga opened up as a result of the infrastructure, it's a lot more beneficial. But further to that, there are also indirect benefits that are going to flow to Ugandan entrepreneurs. If you've been following the debate, there's an issue called local content. And local content essentially means how you can maximize resource wealth by ensuring that locals and local companies participate in the value chain. Now, a number of contracts, like human resource, like civil works, like local transport, security, are ring-fenced for Ugandan companies and local companies. So you would expect that you would benefit. But further to that, even for the major contracts, they must be performed in concert with Ugandan companies. So joint ventures are going to be created. And through those joint ventures between local companies and the bigger companies, there's going to be transfer of skills, transfer of technology, taxes are going to be paid. So I think in the grand scheme of things, it's an exciting time for entrepreneurs, not only entrepreneurs, but also government in terms of benefits that will accrue.
Well, how can the Ugandans really position themselves to better benefit from it? Actually, now that you bring in the aspect of local content, and there's usually worry of these projects being taken away by foreigners, how can Ugandans position themselves to see that they benefit more from these projects? Okay.
There's a part which Ugandans have to play, but then there's also the part which the regulator has got to play. Now, the regulator of the oil and gas sector in Uganda is the Petroleum Authority of Uganda. Petroleum Authority of Uganda has lots of powers in terms of ensuring that the oil sector in Uganda is well run, but then also deepening the entrenchment of local content. So Petroleum Authority has wide powers. Every contract which is going to be awarded has got to be approved by the Petroleum Authority. And they have residual powers of, even when a contract has been awarded by Total or CNOOC, to go and speak to them and tell them, you know what, unbundle that contract, we want, or partner with another Ugandan company. So you would expect that at the highest level, the Petroleum Authority of Uganda should reasonably police and enforce the implementation of local content. But coming to the side of Ugandans, the oil and gas industry is an industry of high standards in terms of environment, in terms of safety, and then also in terms of delivery. So Ugandans have got, at this point in time that the opportunity has opened up, they've got to prepare in terms of compliance, have policies around safety, have policies around governance, because if you have those policies in place, you're going to compete favorably in terms of winning the tenders, but you would also be able to unlock financing. But even more to that, some of the opportunities that are available can best be undertaken by foreign companies in conjunction with local companies. So how do the Ugandan entrepreneurs position themselves to be attractive to those foreign parties so that they can partner with them for those opportunities? Now,
we speak about the aspect of environment. If you remember correctly, environmental conservationists raised concerns about the effects that this oil pipeline would bring. Yes. Do you think their concerns were valid? And if they were, do you think there's some strategies that have been put in place already to ensure that they do not affect the environment?
The concerns of the environmentalists are legitimate. If you've been following the press, or reading literature, the concept of global warming is real. And fossil fuels, that's where oil and gas falls, have significantly contributed to this. When you look at some of the waste materials in the oceans, they emanate from plastics, which plastics are a byproduct of the petrochemical industry from which oil and gas is created. Now, for the case of Uganda, Total is managing what they call Tilenga. Tilenga is one of the projects. The other project is Kingfisher Production Facility Project. And Tilenga is in a game park, the Maction Falls. So there's disturbance of the rights of the animals. So the environmentalists have really been keen and making sufficient noise to ensure that those rights of the animals and the disturbance of the ecosystem is not compromised. But then also the pipeline is going to run on the surface. It's going to displace people. People are going to be displaced. So the cultural disturbances, the social strifes you might cause if people are not well compensated. Yes. So what essentially our law provides, before a project is approved, you must undertake what they call an environmental social impact assessment. The rationale of an environmental social impact assessment is to identify the drawbacks in terms of environmental concerns. Once you've identified what the environmental costs are going to be, then you determine strategies around how you're going to mitigate. And once the regulator is concerned that all those issues have been addressed, they approve the project.
All right.
They've been approved.
Thank you so much, DENIS KAKEMBO, for joining us in our studios tonight. It is definitely an exciting moment for Ugandans, and we look forward to that and so much more. We will, of course, keep you updated on the signing of the FID tomorrow. Thank you for joining us on Talk of the Nation, and TV Weekend Edition will continue, so do not go away.